what I hope that you take away from this today is that regardless of whether the election went the way you hoped it would or not, and we're going to have people on here who that it absolutely went the way they hoped it did, and we're going to have people who didn't. Regardless of that, what I hope you take away is one, we're actually in a decent spot right now as far as the economy and the markets go, and two, politics usually don't turn a bad economy to, or excuse me, a good economy to a bad economy. I would also say the same in reverse. Usually, just politics by itself doesn't change a bad economy to a good economy either. But right now, we're in a fairly good economy. I know sometimes it doesn't feel like that. We'll actually talk about that a little bit. But we're starting off at a fairly good place. And that does give us some confidence going forward that economically, we could be set up for good things even throughout the next 4 years, sort of regardless of what the policy initiatives are. So, again, a grain of sand there because, of course, politics does affect the economy. It's just the magnitude of that effect is less than, I think, what the average person thinks, or at least what the media and the candidates themselves want you to think. So, with that, let's get started. Now, again, I think most of you on here know me. If you don't, my name's Anthony Gerbi. I'm a financial advisor with Stein Financial Group. We do monthly events just like this, and this is usually one of our most popular. This and kind of our mid-year market updates um, tend to be some of our most popular because everybody's, rightly so, wanting to say, well, we had this election. Now what's going to happen? And I'll leave these disclosures up there for just a second. It's just giving definitions and things like that. I am a financial advisor. I'm not an accountant. So we're going to talk about taxes a little bit, but know that this is not accounting advice. Certainly, there won't be any legal advice in here either. I'm not an attorney, but I am a financial advisor. And so I can give you some clarity, at least on what we're thinking for the markets and for the economy. And if any of you have met with me recently, I've probably referenced this graphic. This is the question I always get asked is, well, what's going to happen to the market now that we know President Trump has been reelected to a second non-consecutive term? Maybe that's a good place to start, by the way. I think we're hopefully all aware of the election results, but the President-elect Trump, it has won the presidency. The Senate has gone to the Republicans, at least in terms of majority, although there is a difference between what we call a majority and a supermajority of 60 or more. That gets a little nuancy. We won't get into all political nuance, but it's a simple majority, not a supermajority at this point. But that is a flip from where it was previously. The Democrats were in the majority prior to this election, and I guess still are until January 20th, right? Um, and then the House has yet to be decided. Now, if you just look at where the races are, it does appear that the Republicans will pick that up and be in the majority there as well. Now, they currently are too, so that wouldn't be a change. But that has not been fully called yet. There are many races where votes are still outstanding. I will say, if you just go to your favorite election tracking website, whatever that is, I did that before I logged on here, and there are certainly more in terms of the amount of seats needed to be won. Republicans are favored and ahead in enough races to retain the majority. So if the current numbers hold, that's what will likely happen. But it'll probably be a couple of weeks before we know that for sure. So I'm going to go through this and kind of assume that that's going to be the case. But I'll throw a few caveats just in case there were to be some big changes in the vote tallies and the Democrats were to pick up the House. Personally, I think that's unlikely just looking at the polling number or the actual vote numbers. It's not polls anymore, thank God. We're actually counting votes, not just anticipating polls. But anyway, we'll get into what all that means. But getting back to what I've got on the screen here, this is every presidential election back to 1948. And what I want you to key in on is the very bottom, okay? First off, this is the 60 days after an election. I don't know if it actually says that on this graphic. So what is this measuring? This is measuring the stock market, actually from election day to inauguration day. It does say that. Good. So what did the market do from the day of the election to the day of the inauguration after each president was elected, going back to Truman in 1948? Well, you can see there are a lot of variability there. Obama, big down year. Bush in 2000, decent down year. That was obviously for Obama 2008 financial crisis, and Bush, that was the dot-com bust in his case. But I want you to look at the bottom right at the averages, okay? And what that says is when a Democrat wins, going back to 1948, the market goes up an average of 1.5% from election day to inauguration day. And if a Republican wins, the market goes up 1.5% until inauguration day. And that to me tells the story. Okay. And that is exactly why I feel the way about elections and politics that I do, that I kind of explain with my sailing metaphor, right? The market usually goes up, period. Forget about entering politics in the equation. 7 out of every 10 years, the market's up. That means that, yeah, when a president's elected, the market, there's a decent chance it's going up. But my opinion is that if the market goes up, it was probably going to go up anyway. Not that there can't be an effect, there can be. You saw the market shoot up yesterday. Now, how much of that was because the result was Trump and the Republicans in the Senate? And how much of that was just, well, finally the election's over and we know, right? I think it's a little of both. And I would have said that if the Democrats had won too. It's a little of both. But what this tells us, in my opinion, is that the market's going to do what it was going to do anyway. There are things where we can put our foot on the scale, but don't think that, wow, this party is necessarily better for the markets than the other one. It all comes down to policy and those minute details. So let me walk through some of the policies here. I'll make myself smaller and get out of the way so we can read all this. But we just got through election season. We heard a lot about policy proposals, but just to lay them out, this is take the time to just read this if you're curious. These are the things that we're watching for. Now, this is certainly not every policy that's been proposed, but these all do have some tie-in to our economy or our markets. And I'll go through them one at a time, but I won't spend, 20 minutes on each option here. Obviously, we'd be here all day. But I will go through later a little bit about what I think these could look like, because these are just what's been proposed. And that's the key, right? Because not everything that gets proposed happens. And first of all, things happen that aren't proposed, but things that are proposed sometimes happen in a much more watered down version of the policy that was actually proposed on the campaign trail, right? We all kind of know how elections work. So here are the policy proposals that President Trump had put forward during the campaign. And that is make the expiring tax cuts that are set to expire at the end of next year permanent. Okay. And that to me seems like something that I would guess will get done. And if you're not familiar with that, in 2017, in Trump's first term, there were tax cuts passed, both personal and corporate tax cuts. And the personal tax cuts are the ones that are set to expire at the end of next year. Republicans have said that it is one of their agenda items to make those permanent, and I think that probably will happen in some way or another. Consider replacing personal income taxes with tariffs. That is a very pie in the sky option. First off, I don't think the numbers are going to work for that when they actually do what the revenue is going to be. And secondly, just getting that through and getting those changes through Congress is going to be a very tall task. I'm not saying it can't happen, but I think that's not the highest priority. The first priority that would make the most sense to me is extending the tax cuts. And by the way, how that affects all of us, the biggest way it affects all of us is the standard deduction. So not to get it again, this is a little bit in the weeds tax wise, but every year everybody gets the opportunity to do one of two things, either on your taxes. Either you itemize or you take the standard deduction. Okay. And the standard, as the name would imply, everybody gets. It's a flat number for everybody. What they did in 2017 was they doubled that standard deduction number. Okay. So it made it much harder to beat it. You want to take the number that's the higher because that's the amount that comes off your income and ends up with your taxable income. So anyway, you want the biggest number you can get. Well, for me, one of the things about that policy change that I think was really beneficial was 90 some percent of people now don't itemize anymore. And what that has done is that it has made taxes so much easier for people to do. right? Because you don't have to track all your receipts everywhere. Now, if you still do that, you still itemize, great. And you can still track and see if you can beat the standard deduction, but very few people actually do on a year by year basis. And that just makes taxes easier to do for everybody. So that's just an efficiency change that I can kind of get behind. Again, we could quibble over the numbers, but we're going to talk about, obviously, when we talk about taxes, eventually that feeds into debt and deficit and what are the difference between those two. We're going to get into that in a little bit. Certainly, we don't anticipate the deficit or the debt is going to decrease under President Trump. We expect an increase in the overall debt of the country. To be fair to President-elect Trump, we would have expected that under President Harris as well. So that's really, both parties are kind of spenders now. Neither one is really all that serious about fiscal responsibility, at least on a year-by-year basis. Second, trade. Okay. This has been in the news quite a bit. These are proposals. This is not something that they can necessarily do completely unilaterally. There are some mechanisms where, Trump could try to levy these tariffs on his own. But let me talk for just a second about tariffs, right? So you hear impose a universal baseline tariff of 10%. By the way, this is the one that at one rally or maybe multiple rallies, he floated the idea, well, maybe it should be 20%. And that's what kind of stuck in the news. That would be a pretty tall task, I think, to actually get to 20% on every U.S. import. But secondly, imposing up to a 60% tariff on U.S. imports directly from China. That is a proposal that has been floated. So let me talk about this for a second. First off, and I like the way this is worded on this slide, impose a 60% tariff on U.S. imports from China. Not a 60% tariff on China, a 60% tariff on U.S. imports from China. And this is the key thing to understand when it comes to tariffs. I'll use a story to kind of illustrate this. Many of you probably know this already, but my dad likes to go up to Canada every year with some of his buddies for a fishing trip. Okay. And it's been happening since, early 2000s, if not earlier. And a couple times I've gone up too. I'm not much of a fisherman, but I've gone with. You get up kind of middle of nowhere in Canada, up north in Ontario there, and it's peaceful and it's quiet and you just kind of get away from everything. It's nice. But on the way back, a lot of times they'll stop at the duty-free shop right before you cross the border, right? Because what's so fancy about a duty-free shop? Well, you don't have to pay any import taxes. So, they'll pick up, usually it's like they want to bring a case of Canadian beer back with them or something like that. So you pick it up before you cross the border and you get the duty-free and you don't have to pay the import tariff. That is a good illustration of how tariffs work because who pays the tariff, right? We do. The US company does. When you bring that stuff back across the border, whatever you picked, you're the one paying the tariff. Or if you got it at the duty free, you're the one avoiding the tariff. But either way, right? It's not China that's paying the tariffs. It's the US companies that are importing the goods from China. What does that tend to do to the prices of those goods when they end up on the store shelves or in the car dealership lot or wherever, right? It tends to make them more expensive because the people who are importing them, the US companies, are like, well, now we got to pay up, maybe it'll be 60% more. We're going to have to adjust our prices potentially by 60%. And again, it doesn't always work perfectly one-to-one like that. But in general, that's the relationship. So when you hear about, well, what's going to happen to inflation going forward, which is prices going up, and there's been talk about prices coming down. Prices generally don't come down very often, unless it's very specific things like oil. Prices usually go up. What we try to do is just have them go up less than, what we had during the post-pandemic era. But tariffs tend to increase prices. So at least historically. So that's one thing that we're watching for from the trade policy here is whether inflation will stay higher because of increased tariffs. By the way, the other kind of negative thing about tariffs is, do we think China is just going to sit there and just take it and say, well, we're not paying the tariff, but you're now going to demand less of our imports because they're more expensive. You'll go elsewhere. Well, they might slap a tariff back on us, right? And then it's sort of a spiral downwards where we just keep retaliating. Personally, this is just my personal opinion. I feel like some of these numbers are maybe just the first salvo in a negotiation where it's, hey, 60% tariffs on China. What are you going to do about that? And they say, whoa, 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 okay, what if we did 40? Because even though China doesn't pay, it does affect the demand from their economy, right? There's no doubt about that. That's what tariffs traditionally have been used for. That's what we anticipate they would do again. So I'm not saying there's no possible silver lining. I'm not saying there's no reason ever to do a tariff. What I am saying is, in general, tariffs are often seen to be more negative than they are good, at least in terms of the economic cost to the economy. Now, there are reasons why the Trump administration would be proposing these tariffs, and one would be to bring some manufacturing back to the U.S. by making manufacturing from abroad relatively more expensive. I guess the economics perspective on that would be maybe we should find a different way to do that. Not that that's a bad goal, just can we find a different way to do it? So I'm trying not to be critical of the policy, but I think we need to know that tariffs can lead to inflation. It's not a straight line. So, I've heard on the campaign trail, well, tariffs amount to a sales tax on the US consumer. I know what they're trying to say when they've said that, the people who have said that. It doesn't work exactly like that. It's not one to one like that. It's a whole complex web of causes and effects there. But I will agree that in general, tariffs do raise prices because it makes things more expensive. That's generally what raises prices. So that's a big one. I didn't want to spend more time than we needed to on that, but that's a big one. Immigration, this is one that, there's been talk of this mass deportation of all people who are either pending their citizenship hearing or are flat out just came here across the border without going through the proper channels and would be considered illegal immigrants at this point. The idea that we're going to deport millions of people when you hear about how overworked that system is already is very suspicious to me. That it's going to happen in anywhere close to a timely manner. They may try it. It may even get through Congress or something close to it. I'm a little skeptical about that too. But even if it does, just the logistics of making it happen seem to me to be very difficult to pull off, just organizationally. Forget about whether you feel like that's a good or a bad thing. Just how would you do it if you were tasked with doing it? Very difficult thing to do. Also, you got to make sure while you're doing it, and this is the economic piece, that you're not just destroying local economies. And I know, there's been a lot of rhetoric about immigrants and their kind of drain on the economy, but I think we all have to admit that in a lot of places, immigrants are supplying a lot of benefits to the economy by working jobs that you or I wouldn't necessarily want to do. And if you just cut all that out and just say everybody's gone, that's going to leave a big vacuum. And are we going to be able to fill it right away, or would that be a negative thing, at least in the short term, for the economy? I think those are big questions that nobody really knows the answers to right now. Energy, will we continue on the path towards U.S. energy independence? I absolutely think we will. I don't think that one's a super controversial. Where they may decide to drill for fossil fuels, that could be the political issue. But economically speaking, really in the U.S., as far as oil goes, it's two questions. Where do you get it from, and how cheaply can you get it out of the ground? Right now, the answers, at least to that second question, how cheaply can you get it out of the ground, are what is making us still use Middle East oil because they can do it so much cheaper than we can because it's more accessible. So without getting into oil drilling or anything like that, I just anticipate that there's going to be more talk about should we open up, new areas of drilling and pros and cons of doing that, both economically and environmentally. Defense, push for more self-reliance from NATO. This isn't a huge one economically, other than to say whether America leans into the global community or leans away from it can make a difference when conflicts come up, as far as, and those conflicts can then bleed into our economy and our markets. But in general, those are kind of one-off events that we may react to differently depending on what the circumstances are. So we don't need to speculate too much there. Healthcare, Trump has talked about repealing the Affordable Care Act, notably was not able to do that in the first term. It would have to go through a vote on Congress, and it did not pass the vote. This is the famous from the debate, what is your plan? Well, I have concepts of a plan, right? Personally, I think they're kind of, well, personally, I don't know. I don't know what they're going to do. I would not be shocked if they kind of leave it alone, actually, despite the rhetoric on the trail. That's kind of my personal bias that they'll probably leave it alone, but we need to be ready for it. And this is a big question for retirees potentially, because as you look to retire, if you're not able to stay on your work plan, then you got to figure out where your health insurance is coming from. And if this, like in Minnesota, we have MinSure, if that goes away, that takes an option off the table. So it does affect things, but we'll see what happens. I think that one's much more tenuous. Regulation, we're going to talk about that a little bit later. And then potentially a little more interventionist when it comes to the Federal Reserve. What that actually means, nobody knows because the Federal Reserve is this independent thing. Trump has talked in the past about being dissatisfied with what they do, but it's one thing to, go on the news and say you really think the Federal Reserve Chair is doing a bad job. It's another one to actually go in and try to meddle with that. And I think that there's a pretty clear line there, and they haven't crossed it so far. So we'll see. Again, there's a lot of wait and sees here. A little bit more info on tax policy. I talked about some of this already, so I won't linger here for too long. But corporate taxes, one of their goals may be to lower corporate taxes further. It's important to note that if you lower corporate taxes, that means for every dollar that a corporation earns, even more stays in their pocket. Potentially, the market could like that, right? And aside from the political piece of how much should corporations pay in taxes, that's a political question. But market-wise, the less money corporations have to pay in taxes, the more they potentially get in profits. Although that, again, is not a straight line calculation. So don't make it, I'm not trying to make it seem like it's simpler than it is. But that could potentially be good for the market. The question is whether that would be good politically. What would that mean for all these other things? Of course, we all hear about these corporations who pay very little in taxes. Why? Well, because they tend to have a lot of things to offset their taxes, write-offs, let's say. One of the things in the 2017 tax cuts, personally anyway, not me personally, but for personal income taxes, was they reduced taxes, but they cut out some of the deductions and loopholes. And so their argument was, well, that's going to make it more tax neutral. And it didn't quite work as well as they thought, but taxes are a big thing. I get the attempt. If there was a reduction in corporate taxes, would they then try to remove some of the deductions and loopholes that corporations are using to avoid paying taxes right now? Maybe. And then maybe that could actually be like a net increase in taxes. I'm not trying to advocate for this policy necessarily. I'm just saying what could happen. Those would be things that would be talked about, right? Tariffs, I already talked about that. We can move on from that, I think. By the way, if anybody has questions throughout, there's the chat. You can raise your hand. There will be time at the end for those as well. I just didn't say that right away at the beginning, so my apologies. State and local taxes. Again, these are all proposed policies. So whether this actually happens or not depends on what makes it through Congress. Eliminate taxes on Social Security benefits federally for all people. Right now, there's kind of a banded system. Most people, including most of you on this call, are going to pay 85% of your Social Security check is taxable. You're not going to pay 85% in taxes. Only 85 cents on every dollar is taxable. We use that for planning, but if Social Security became non-taxable, period, then that would even be a stronger incentive, by the way, for those of you who are still waiting for Social Security. It would be an even stronger incentive for you to wait longer for it because the more money you can bring in tax-free, the better off and more longevity your plan can have. Again, that's for me to worry about, but just things I'm thinking about. Again, repeal clean energy subsidies, extend the business tax provisions. All of this stuff is going to get talked about to death. These are just things that we're watching for. And I don't see either of those as major issues for the economy or the market in the aggregate anyway. For individuals, it might. But I just spent this time talking about policy, right? And it's tempting to think, well, if this happens, then that might happen. And this happens, then that might happen. And the problem is life never usually works in a straight line like that. So this is a chart. I know it's a little busy, so my apologies. I'll make myself a little bigger here too, now that we're off the text-heavy slides. This is the dotted line in the middle here is the Trump administration versus the Biden administration, or not versus, but literally when the transition happened, right? And this is the market, the sector of the market that invests in companies who are trying to do clean energy. So solar companies, wind power companies, more efficient, fossil fuels rather than just like your classic oil companies, right? And the thinking when Biden was elected was, well, will clean energy actually go up because there's going to be all this investment in renewables and things like that. And it made sense, right? That was a big policy initiative of President Biden's. The Infrastructure Act had a lot of money set aside for that. But look at what actually happened with those companies and their stock prices. Under Trump, they had this amazing rise. And that, again, very little to do with Trump, in my opinion, way more to do with the fact that that was just the topic du jour at that time. It just happened to be going up and went down, excuse me, under Biden, where the regular energy index, which is the oil companies, went up under Biden, which is the opposite of what you'd guess by looking at their policies. So my point is not to make this granular point about clean energy. My point is all these policies that I just took you through right here, don't let's not be so quick to assume we absolutely know what the effects will be, right? Or what the difference between a Republican administration and a Democratic administration will be. It doesn't always work out that way. And this is another good illustration of my main thesis here, which is why did this happen this way? Probably because clean energy was going to go up in the 2019 to 2021 period anyway. It was just the right time for that part of the economy to grow. And it maybe grew too much during that time and it contracted a little bit under Biden. And that's probably what was going to happen regardless of who won either election on either end of that dotted line. So I don't want, it's important to differentiate policies. It's important to look ahead as much as we can, but I'm under no illusion, and I don't want you to be either, that it's a straight line prediction. Well, this policy will be good for the economy. This policy will be bad for the economy. It's much more complicated than that. And again, this is the limitation of politics as it comes to affecting our economy. This is for those of you who just want to get down to the brass tacks. Was the market going to go up based on the election, or is the market going to go down? I already showed you that, from election day to inauguration day. Here's a little bit more. So this goes back from 1937 to 2023. Okay. And on the left side, so I'll move myself over there. The side that's below me right now is based on how the party in control of White House, Senate, and House, and what the market averages on an annual basis under each of those control. And what you can see is in a period where it's Republican, 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 the market tends to do the best at 16% per year. And in a period where the Republicans have 2 out of the 3, which is an R split, it tends to do the worst, which is 9.1%. What I want you to take from this is all of those bars are good numbers, right? The lowest is 9% a year for the market. That's still very good. So regardless, right now we're either looking at the triple R or the R split because it depends on which way the house goes. But either way, we still expect good things in the long run from the market. Either way, 9.1%, even if we had to take that, would still be a pretty decent number. So I don't want to get too hung up on the parties. And people always ask, well, which party's better for the economy and for the White House? Well, it totally depends on the policies that they implement. It's not just enough to have an R or a D next to your name. It depends on what you do. But it also depends very little on you in the sense that if the market was going to go up, it's probably going to go up anyway, regardless of what you do, at least to an extent. So again, hopefully that puts you at ease that all of those numbers are good. It's not like, well, but in the case of an R split, actually the market tends to go down. No, not even close to that. And I think that's what people worry about sometimes. And then finally, I usually like to highlight this. What does the stock market do year by year in the presidential cycle? The third year, for all sorts of different reasons, tends to be by far the best of a presidential term. Actually, it's going to look like for under President Biden's 4 years that the fourth year, this year, is probably going to be his best year. But these are averages. And I said his best year, but I don't like the way I phrased that because he doesn't have as much to do with it as he would like to believe. And I'd say the same thing about Trump when he goes in the office. It just happened that the fourth year was a good year. But for various reasons, now one of these reasons could be, well, midterm elections happen in between the second and the third year, right? So maybe there's a shift. Maybe there's uncertainty heading into those and then more certainty once they're done, right? There's a lot of different reasons. But this is one thing that usually sticks out with the numbers is the third year, for whatever reason, is usually the best year for the markets. And again, this is all markets, not economy here. Um, if you got your email yesterday, by the way, this is a good time for me to mention emails. We've been having some issues where some emails are going into people's spam folders. Obviously, if you're signed up here, you probably saw an email from us at some point. So hopefully it's all working great. But if you've been like, hey, I haven't gotten as many emails from them as normal, check your spam folder. Just a PSA for everybody out there, just in case. And I bring that up because just yesterday we sent out a note based on the results of the election with my thoughts. And it included this chart just without any color in it. So now I've got the colored version for you. And what this is showing is 100 days prior to and following a presidential election. What happens to the market? I know there's a million lines on this chart. Let me just tell you what this means. In going back to 1980, in all but two presidential elections from 1980, and the two in particular were 2000 and 2008. Oh, I wonder what was happening at that time that would make the market negative after the election. Great Recession, dot-com bust, right? Totally non-political factors. But in every other election, the 100 days following the election, the market is up. Okay. So I have had some people say, ooh, I'm really nervous about the way this election's going to go. And, if my particular result doesn't happen, that makes me nervous about the country, the economy, all of it. And this is the market and the market too. In general, really, regardless of how the election goes, the market's usually up 100 days later. So at least what this should tells me is there's no sense in panicking around an election. There's no sense in panicking ever. But there's no sense in necessarily bailing out because an election's happening or just happened. Because in general, you're going to be, if you bail out and go to cash, you're wrong more than you're right. Now, here's an interesting one. Now, I think we all know this intuitively, but there's actual good data to back it up. This is the opinions of of people of how the economy is doing. And the point of the slide is the title, which is don't let how you feel about politics overrule how you think about investing. Okay. And that last slide talked about it, but this is even better. When the party that you prefer is in the White House, statistically, you are more likely to think that the economy is doing better than your other party counterparts, right? So don't worry about the numbers on here. What is this showing? The first chart right under me right here, this is Bush Jr., George W. Bush, his 2 terms. And during his period of while he was in office, Republicans tended to think the economy was better than Democrats did, right? And they both thought it was crappy towards the end because then we hit the financial crisis. And as soon as Obama got elected, it flipped. Democrats seemed to think that the economy was doing a little better than Republicans. Again, they're not super far off always, but still better. Now under Trump, Republicans think the economy is doing very well. Democrats are more moderate. And then in Biden, Democrats have thought, oh, the economy is doing better. Republicans have thought it's doing worse. And I'm not saying who's right or wrong because there's lots of different ways you can look at it. I'm just saying don't let the bias of I like President Trump, I don't like President Trump affect how we think about your investments. I certainly don't let it affect how we think about it. I'm looking at the real brass tacks every day. But don't allow that to at least color your investing. Again, politics is one thing, investing is another thing over here. But don't let those two bleed together too much because a lot of times it seems like they're more connected than they really are. And a lot of times they're not super connected. All right. So I mentioned I was going to talk about the debt and the deficit. Okay. And by the way, I usually get this question of deficit, debt, and it's important to know which is which, I guess, is what I'm getting at. The deficit is the year over year number. So are we in the red or are we in the black for any one year? You can think about it like your credit card statement. Am I able to pay that off every month or every year if you want to extend it like that? Or am I running up a tab every month, right? If you're running up a tab, you're a deficit. You're spending at a deficit, right? If we're paying it off every month, then there's no deficit. And potentially you're even able to save on top of that. That's the way personal finances should work, by the way, ideally. We don't want to run up deficits on credit cards. For a country, a little bit different. I don't like using personal finance metaphors for the country as a whole just to help you understand it, but it's not the same thing when the US incurs a deficit that it's, wow, we're getting deep into credit card debt. It's a lot different. There's a lot of different mechanics. But year over year, that's the deficit. Aggregate, how much debt do we have out there? So year after year, what gets piled on to our overall debt? That's what we mean when we say debt. And one of the big items on the campaign trail was, well, what's going to happen to the debt under either President Trump or Harris? That was obviously one way they tried to differentiate themselves from each other. But now that we know it's President Trump, we think it's probably likely, as I mentioned, that the TCJA, what does that stand for? Tax Cuts and Jobs Act. That was the tax cuts that were put in place in 2017. We think it's likely those are going to be extended. And what does that potentially do to our national debt? Well, we expect our debt to be at 122% of GDP. Wow, a bunch of fancy economics terms in there. Basically, we expect our debt to go up regardless of whether these tax cuts are extended, but we expect the debt to go up more if those tax cuts are extended. Okay. And that's not a partisan thing. That's just looking at the numbers. And there's no way that these numbers are going to be exactly right. These are projections. You can obviously see this goes out to 2030 here, but these projections have generally been relatively reliable. So we do expect the tax cuts to increase our debt, not to reduce it. Again, there's a lot of moving parts there. I'm not trying to make a partisan statement there, but that's just what we project. And by the way, it's not just it's the Congressional Budget Office. So the office that actually analyzes tax policies for Congress, that's the office that thinks the deficit will go up if we extend the tax cuts. Again, I like part of the tax cuts. I like that standard deduction thing because I think it has benefits beyond just revenue. But we anticipate under President Trump, the debt will continue to grow in this country. There will not be a curtailing of it. And again, we would have expected the same thing under President Harris, just to potentially a different degree. So now we get to, I think, the fun part, not Social Security in particular, but the fun part of us just sitting here and saying, well, what might happen? What do we need to watch out for? Those are all the things that we could measure that I just went through that have been concretely proposed. But there's a lot of things in this race that we just finished up with Election Day that weren't proposed. And I'm not trying to get here and speculate necessarily, but there are things that I think we should all be prepared for. Will there be changes with Social Security? The answer is at some point there will be, but maybe not in the way you think. I mean, I know there's been a lot of talk about, well, it's been Republicans' agenda to privatize Social Security. And then we're all basically investing for ourselves and da da da. Personally, I think that's somewhat unlikely. Not impossible, but unlikely. What's more likely to me is that at some point, and this may not even be in this next presidential term, so I don't want to get too ahead of ourselves, but at some point, Congress is going to have to act to ensure that there's enough money for the decades to come to pay us all what has been promised. And the easiest ways to sort of kick the can down the road and allow more money to be in there are to potentially lower benefits, maybe even for people who haven't even been born yet, right? To cut benefits, not for people receiving or who are about to receive. That's sort of a no-go for politicians because who votes at the highest percentage? People on Social Security, just demographically. So you don't want to piss off the people who are most likely to vote you out, right? But you are going to need to make some concessions somewhere to keep the fund hanging out at the rates that have been promised. And again, there are a couple different ways to do that. It could be a combination of all of these, but raising the minimum age, raising the full retirement age, reducing the amount that the check grows if you wait for Social Security versus if you take it earlier, right? But I think it's very unlikely that any benefits are going to be cut for anybody who's currently receiving or who is it within, I would say, even 10, 20 years of receiving. I think that's very unlikely. They're going to rob people, rob is the wrong word, but they're going to take from tomorrow to pay for today. And tomorrow is young people. They're probably going to change the rules for young people, is what I would guess. So I think anybody who's alarmist about Social Security needs to think about what are the incentives for the politicians. The incentives are don't piss off the people who are on Social Security because they vote. And again, we've already heard that one of the policies might be to even make Social Security not taxable federally. We'll see if that gets through. I'm not saying that's going to happen, but that's a proposal. Healthcare policy. We talked a little bit about Obamacare. The problem with repealing Obamacare is there's not a clear alternative that's been articulated. Maybe the administration and Congress will come up, hey, this is what we'd like to replace it with. And then we'll analyze that on its own merits. I'm open to ideas. I'm not saying but repealing it without a replacement is, I think, a very dangerous maybe is putting it a little too strongly, but I think it's not a great move to replace it without or to repeal it without a replacement. What are the people who are relying on that for health insurance going to do? Well, if you don't have a replacement for them, they're just going to go to the ER every time they get a head cold, and taxpayers are going to pay the bills for that. So it's not going to be actually cheaper to repeal it if there's not a good substitute in place. So maybe they will, maybe they won't. I'm a little skeptical that this one will actually happen, at least the way that they've kind of indicated they want it to happen, they being Republicans. Federal Reserve policy. We are in a period where, again, not everybody, and Trump has not been the biggest fan of the Federal Reserve in the past. Um, we are in a period for one of the first times in recent memory, we went through a business cycle, a period of the market going up, and then inflation going up and things getting too hot, and they have to raise interest rates to slow it down, and the market drops. But the economy stays pretty steady all throughout, which is what the Fed cares about the most, the economy, not necessarily the market. And this is one of the first, if maybe not the only, soft landing that has ever happened in the history of our country's economy. And the Federal Reserve was the architect of that. Now, not everything was perfect. We had inflation, right? The unemployment rate has started to creep up, but they are cutting rates in response to that now. And I think hindsight being 2020, and really that's all we have is hindsight for a lot of this stuff. The Federal Reserve has done a very good job, in my opinion, of managing this through. That doesn't always mean that they do things in the interest of the market, right? They do things sometimes with the interest of the economy over the market. But we are at a period where inflation is getting about to the target we want it to be at. Unemployment is still pretty low, even though it is ticking up a little bit. And I'm not trying to minimize that. But those are the things the Federal Reserve watches. And if they're both kind of in good zones right now, we got to give them a little bit of credit. At least that's my opinion. And, I went to school for economics, so I'm watching this stuff very closely. And I think the job that the Federal Reserve has done has been excellent over the past few years. Not perfect, but excellent. And look, that's my opinion, and that doesn't always bleed into the market. But a lot of times, a good, strong Federal Reserve policy is the backbone of a successful economy and eventually stock market. So it does affect investments in that way. Regulation. Now, this is a big question mark, I think, because in some ways we can tell, what did Trump do his first term? Well, he was more, I guess you could say anti-regulation. Maybe anti is not the right word, but opening up, loosening regulations. One of the things that's on the market's mind right now is as far as the Federal Trade Commission, which is the commission that watches over antitrust and monopoly issues and all that stuff, it has been a little hawkish in the past few years. Now, I'm not saying that's good or bad. There are reasons why we'd want a Federal Trade Commission to be hawkish. But the idea is that they've been a little hawkish. And under Trump, the idea or the thought is they will be a little less hawkish and maybe not go after Google, for example, as hard, which has been already labeled a monopoly in terms of search by the Federal Trade Commission. Or they might be a little more allowing of major corporations to merge or acquire new businesses. And in general, business likes that. Again, as a country, politically, there's a good reason why the Federal Trade Commission exists, right? It's to make sure that monopolies don't form and we don't get exploited as consumers. But in general, the business community has felt that the Trade Commission is a little restrictive lately under the head that was appointed by Biden, and we'd anticipate a new head being put there. So, could that be good for the market? Potentially. I'm not ready to draw a straight line between those things, but that's kind of the news on regulation. There's also this narrative out there, and for now, it's a narrative. We'll see if it materializes that Trump may retaliate in a regulatory way against corporations like Facebook is an example they usually throw out that he feels have wronged him in the past. We'll see. I'm not ready to predict that that's going to happen. I think that's a very specific thing, but if it comes to be a little more wild card in terms of, well, I'm really going to look at this company hard because I don't like them as much, then the business community might react negatively to that because it's just like, well, just make sure you're not on his bad side then, and that's not always the best business practice to go for. So I don't want to get too speculative, but that's what the sentiment is right now. We'll see if that materializes into reality or not. I spent a lot of time talking about tariffs. Both candidates, by the way, agreed that tariffs are a tool. It's just the Republicans who have seemed a little more gung-ho to really raise them. We will see what actually gets put in place. Again, personally, and this is just me personally, I'm wondering if some of these numbers that are thrown out for tariffs aren't negotiating positions versus actual threats. But I guess for it to be a good negotiating position, you kind of have to be willing to actually do it, right? Because what if somebody calls your bluff? Um, for the economy, for the markets, I hope that we do not put in 20% global tariffs and 60% tariffs on China. I do not think the economy or the markets would like that all that much. If that happens, and if it looks like it's going to happen, that could be something that we may want to react to in investment portfolios. But I do think it's a little ways away from happening. We'll watch it. We'll give you updates as it does, or if it does. And, depending on how it all gets implemented, that can make a difference too. So, in general, I'm not a huge fan of tariffs. I think they can have more harms than goods. Not that they can't have goods, it's just the overall cost benefit analysis. But we'll see what actually gets through. I'm a little skeptical that it's just going to be, well, let's rubber stamp it first day in office and make it happen. Maybe I'm wrong. Maybe I'm a little too naive about that, but I'm a little skeptical that it's going to go through that simply. And lastly, we wrote this slide before the election of a likely divided Congress. I would say it's more likely right now that Congress won't be divided by party, meaning the Republicans will at least have the majority. However, we've heard a lot talked about this filibuster, right? And whether they're going to repeal it or whether not, and there's all these pros and cons to doing it. But the key thing to know about that is if you have less than a supermajority in the Senate, meaning 60 votes out of 100, you are vulnerable to the filibuster. The filibuster can be used to try to block legislation that would have enough votes to pass, just doesn't have enough votes to parliamentary procedure away the filibuster. I'm not going to get into all that. Even I'm sort of a layman when it comes to that. But there is the still, even with a non-divided Congress, what I'm getting at is there's still a potential for some gridlock. I do think there's going to have to be some bipartisanship, not just Republicans saying our way or the highway, we're going to get stuff through. That may happen, and it probably will happen with some issues. But for other issues, I think they're still going to need to try to be bipartisan just to grease the skids for the stuff to actually happen. And, the more bipartisan Congress needs to be, the less usually gets done, is what the history has been. So we may go into our first non-divided government in a while, where it's literally White House, House, and Senate all are one party. But don't overestimate the ability of that government, even undivided, to just pass whatever they want, however they want. There still are going to be roadblocks there. And roadblocks tend to lead to gridlock. Gridlock tends to lead to less extreme policies being passed one way or the other. Not saying good or bad, just less, everybody has to compromise a little bit. And in general, I think we should still be expecting some level of compromise on some of these policy proposals that the Trump administration has put forward. That's the thesis here. So with that, I don't have a market prediction for all of you. I mean, I will tell you, we are still cautiously optimistic about next year, and the election had really very little to do with that projection. If you've talked to me throughout the year, my thesis going into the year was, well, we might see a drop pre-election. And by the way, I felt that way back when it was Biden versus Trump on the ticket. We might see a drop pre-election, and then maybe it'll bounce post-election. Well, we didn't really see a drop pre-election, and we're seeing a little bounce here now post-election. So what that tells me is we have a market that's going up, 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 up. And we're not at a dangerous level height right now where everything's so expensive, I'm really worried about it. But we're closer to that than we are to, wow, this is a great buying opportunity. So all things being equal, and every one of you is a little bit different in terms of what you're looking for from your investments. But in general, right now, I don't feel like is the absolute best time to buy into the market, but I also don't necessarily think it's a time to sell out of it either, right? And this opinion has very little to do actually with the politics and election day. It has more to do with market fundamentals. But and that opinion is liable to be revised. Don't get me wrong. We're going to get fourth quarter numbers here at some point. We'll put together a stronger opinion about where next year is going to go. But I would say the election, maybe the best thing I can tell you about the election is it did not change our opinions about the rest of this year or next year really 1 centimeter. Okay. We felt fairly optimistic, cautiously optimistic, maybe somewhere in that middle tier range before the election about the markets and the economy. And I still feel that way today. And the politics, I don't think, has really, in the short term, really changed that much. In the long term, we'll see about these tariffs. We'll see if inflation stays higher. What does that do to interest rates, right? Those are all questions that need to be answered. But we got to actually see what's actually going to get implemented first. Again, that's what I would point out to all of you. Just what is going to be implemented out of all of these policies is what's going to make the little bit of difference that policy does make. So I hope in hearing all this, A, you get a better understanding of maybe where we're headed, but B, don't overestimate how much, what would be a good slide to illustrate that? Maybe back to this one again. Don't overestimate how difficult it is to predict from the policy to the economic impact. Again, this clean energy example that I've got up is a good example of everybody thought, well, under Biden, clean energy is going to go like crazy. Green New Deal maybe even gets through. No, no. Even though they did make some policies in favor of clean energy, that sector didn't perform all that well during Biden's administration. And that would be to the surprise of everyone. If I had done this presentation, and I did do this presentation 4 years ago, that was one of the places we were looking for. Will that be an investment opportunity? Hindsight, no. The policies didn't make that big of an effect on that sector of the market. And that's how it goes sometimes. So don't overestimate the politics, is what I would say. It's in the candidates' interest to tell you that they can make the economy do better or worse, and they can affect it. But again, it's the difference between sailing into the wind and against the wind. You're still probably going to go in the same direction. It's just about the little details that determine how fast you're going to get there. So with that, let me open it up for questions here. If anybody wants to type in the chat, there's also just a Q&A box, and you can kind of control whether it's just me or just myself and Aaron who's seeing those questions. If you want them to be a little more anonymous, or if you want to just throw them out to the group, that's fine too. But anybody have any questions or any items that I didn't bring up? I tried to be fairly comprehensive, but of course you can't boil down an entire party's platform to an hour. There's a lot of nuances, and whether it actually gets through is one of the big nuances too. Anybody with questions? Anything on your minds as far as where we go from here? Give it just a little bit in case somebody's typing. Think if there's anything more that I would add about where we're headed here. Again, we feel that, and I'm not a political scientist or a poll expert, but it does seem that the Republicans probably will have the majority in the House, retain that. Don't take my word for it. Watch the news yourself. I'm not prepared to call any elections, but at least that seems to be the way it's going. And I think there will be some changes in terms of tax policy and in terms of certainly trade policy that'll be used as a little bit more of a weapon, I think, against some of the countries that we're trying to establish more competitive trade relationships with, I could call it. One question just came through. Elon Musk was quoted as saying there would be pain coming in the market. What do I think of that? Well, I don't know if that was today or if it was in the past. That to me is a little. First off, anybody who ever says, "Well, there's going to be pain coming in the market," you're always going to be right at some point, right? So it's an easy prediction to make. Oh, I'm a little worried there's going to be some pain coming. Yeah, eventually there will be. Markets do go up and they do go down. So it's a little bit to me a not a very strong statement to say that. But let's take that on its face and say, do we think the markets will be down in the short term because of anything that's happened? Certainly politically, no. That doesn't mean that they won't be down, but if they are, it'll probably be because of business reasons or global issues reasons, right? Global conflicts, something new popping up. It's not something that we're predicting right now that there will be a major drop in the markets. And I think my first question to somebody like Elon Musk or anybody who says, well, there's going to be some pain coming is, what makes you think that? Because I will tell all of you, I was at a conference about a year ago, a little over a year ago, and they had four representatives from four major investment companies. JP Morgan was one, I think American Funds was one, there were two others. And they said, what do you think about 2024, calendar year 2024? What do you think the market's going to do? And what do you think the economy is going to do? And all of them said, we don't think it's going to be a great year. We think we're going to go into a small recession. Both dead wrong, like almost completely the opposite of what actually happened. And I'm not trying to be mean to them. It's very hard to predict what's going to happen, period. But when the sentiment is negative, it's almost never as negative as you might think it's going to be. Okay. Usually the things that do come up that are negative sometimes come out of nowhere, and that's why they're so hard to predict. But I would, for that Elon Musk quote or anybody who says, I think the market's going to be bad here coming up. Why? Why? What's going to happen? That's going to change it from being relatively good right now, right? And if they don't have an answer, then you can say, well, you might be right, but you're probably not right for the reasons you think you're right. And so again, to put a bow on it, our feeling going forward is we're optimistic, maybe cautiously optimistic, but we're still optimistic. Certainly optimistic about the rest of this year. That I feel a little strongly. I can say a little more strongly based on our opinion. Another question came through. What is the history of market fluctuations with expanded wars across the world, with the possibility of escalating conflicts, and even with what we know is going on right now? You've got what's going to be the tenor of the Russia-Ukraine situation, right? What is going to happen between Israel and its neighbors, and whether that'll escalate further with Iran or what have you. And to an extent, we all kind of just have to react to that. I will say, so far, the Israel-Gaza issue and the Russia-Ukraine, Russia's invasion of Ukraine, have not had broad impacts on the global economy. And we didn't think they would, right? So we feel a little vindicated in saying that. But there's always the potential if there was an escalation. Now, as far as wars go, what we need to watch in terms of the market and in terms of trade there's going to be competing effects, right? And I'm not predicting a war. I don't want to get too far into that because it's just a negative thing to think about. But I have to think about it to some extent, right? But international trade in a period of war that's escalated beyond what it's at currently, that could be affected. Well, that could seriously negatively affect our economies. Think back to how our trade was so screwed up during COVID because all the supply lines were choked, right? Well, now all of a sudden, if there's a war going on, resources are being diverted, supply chains are all messed up, that could be a problem for the economy, right? You'd expect that to affect the market. But that would have to take a fairly serious escalation. The other flavor of this is what happens if it's a major trading partner of ours? Like, let's just use the example of what if China decides to invade Taiwan? What does the market do if that happens? And I'm not predicting that that's going to happen, just to be clear. But hypothetically, if it did happen, I would expect the market to go down pretty significantly, at least in the short term. Because China is such a major trading partner of ours, it would affect supply lines. Taiwan's a fairly major trading partner of ours, too, for how small they are. And that would have a much larger impact on our economy and our market than Russia, Ukraine, or Israel, Gaza would. So, every conflict is unique. So I can't necessarily say, well, this is what I'd look for in all of the ones that could potentially pop up. But there are some that are more serious than others as far as the global scheme. So I know that's maybe not the most satisfying answer, but it's really the right answer because we just don't know until it happens, unfortunately. But definitely wars have the ability to impact our market. They also have the ability to happen and not affect our market. And I think that's often overlooked. Opinion of economy versus the market. Well, the economy is actually doing very well. I would say the market's doing even better. We're in kind of a period where both are doing fairly well. The economy is growing at what I would say is a very good pace, not great. Not as I would call the market this year great. I would call the economy good. So maybe if you really want to just boil it down to that, that's how I would put it. But inflation, and that's an economic issue, is starting to get under control. It's already lower than 4%. We're trying to get it down to 2, but we're on our way there because it continues to drop. Unemployment has ticked up a little bit, but we still have more open jobs in this country than we do workers looking for jobs, which means that even if somebody does get laid off, potentially there is a place for them to land rather than just straight to the unemployment line, right? So that makes a big difference for an economy. So I would say the economy is doing good. The market this year has been great. And every time the market does great, the next question we should ask is, well, when are we going to have that next correction or that next drop? And don't get me wrong, I wouldn't be surprised if next year there is a correction or, a 10% drop in the market at some point. But that would be an isolated incident, not a trend for the whole year. And it would recover from that. That traditionally corrections are recovered from very quickly. So will there be ups and downs in the market? Of course. And will there be some downs coming up next year? Absolutely. But for right now, we still feel fairly optimistic about at least calendar year 2025 for both the market and the economy. In fact, going forward, I think the economy is on a very steady pace. The only thing that would make me even somewhat nervous about the market is just that it's been on such a tear. You're like, how long can this really continue for? Is the question. Let's make sure I got to all of them. I think I got to everyone that I saw. Great. Well, certainly contact info, I'll move out of the way, is on the screen here. If there's a question you have that you think of later or whatever, just send it to me in an email, give me a call, whatever works for you. Very happy to go into this, but thank you everybody for being here. I hope this helped. And I hope you got a little better sense of where we're maybe headed. Again, a lot yet to be seen there, but I think these are the things we're going to be watching over at least the next couple of years here. So, thanks everybody. Have a great day.